We will utilize only two moving average lines, which are 5 days moving average line and 21 days moving average line. There are two entry points in this tactic. The first one, when the 21 days MA line is in a 45-degree rising angle, the 5 days MA line breaks below it and returns to its top. For the second entry point, is when the 5 days MA line is on top of the 21 days MA line, which is in 45-degree rising angle as well. Then the closing price breaks below the 5 days MA line and subsequently returns to the top of it. Let's take a look at the application of this tactic. The 5 days MA line has dropped below the 21 days MA line here at this point, but the 21 days MA line is still in a rising trend. Within the next couple of days, 5 days MA line managed to get back to the top. This fulfilled our requirements for entry and the share price soared soon after. Now, you might wonder, what makes the accuracy of this tactic so high? The answer is, both 5 and 21s are important numbers in the Fibonacci series. Also, they are the typical holding periods for short-term and mid-term trading by the big boys in the stock markets. So, when the 21 days MA line is in a rising trend, we can easily tell that the share is in a mid-term uptrend. And all we have to do here is to look for a great entry point. When the 5 days MA line upwards cross the 21 days MA line, it indicates that the average cost of the short-term traders are now higher than the mid-term traders, which means that the short-term traders are optimistic on these shares and willing to pay more just to get them. That's the reason why, if we follow the entry here at this point, the possibility of making gain is much higher. Let's look at another chart for illustration of second entry point. When the 21 days MA line is in a rising trend, the share goes through a short-term price correction and drop below the 5 days MA line. There are a total of 3 candlesticks closed below the 5 days MA line. Then, as the share price goes back to the top of 5 days MA line, it gives us a signal that the short-term price correction has ended, and it's time for us to make entry at this point. After that, we can continue to hold our position as long as the share price maintains above the 5 days MA line, until the share price eventually drops below the 5 days MA line. One last example before we end our sharing in this video. Again, 21 days MA line must be in a rising trend. At this point, 5 days MA line dropped below the 21 days MA line and returned to its top after a couple of trading days. We can make entry on this day as it fulfills our requirements for first entry point. Then, as we can see from the chart, the share price soared soon after. Up until this point, the share goes through a price correction and dropped below the 5 days MA line. 2 days later, the share price returned to the top of the 5 days MA line again. We can then make another entry here if we have extra cash on hand. This is because the requirements for our second entry point are all fulfilled at this point. Any of these two easy and simple entry points can bring us a relatively handsome profit. With just two simple moving average lines, the signals are clear and straightforward. It is suitable for workers who have limited time to watch the market yet would like to trade for short to mid.